Canadian banks set to report earnings starting this week. Scotiabank kicks things off tomorrow. Let's get some ideas on what to expect from Matthew Lee, analyst at Canaccord Genuity. Matthew, great to see you, and thanks for joining us.
Yeah, thanks for having me on.
You're looking for a pretty decent year for the Canadian banks this year, with earnings per share up almost 10%.
Yeah, I mean, look, the setup is favorable right now. If you think about the different factors that go into what makes bank earnings work, we have strong capital markets, strong wealth. We have credit that's remained relatively benign. Loan growth's not there yet, but overall, yeah, I mean, absolutely looking for a good year.
I guess the worry is always about possible consumer losses. What is your feeling? I mean, we are seeing some weakness in the Canadian job market, but you don't think provisions are going to be a huge problem?
No, I mean, I think you've probably heard this term before. It's a K-shaped economy, right? Mm-hmm. And for better or for worse, the banks are most levered to kind of the higher end of the consumer range. What that basically means is that until unemployment really starts to ramp up, or if it does, there's some protection there, especially on the mortgage book. Where we might see some pain is the credit card book. I think even in Q1, you could start seeing some impact there. But overall, again, credit's been benign. Most of the banks have got it toward downward sloping in the second half of the year. And I think 2027 might actually be even better.
Talk to us about Bank of Montreal. You say they have a pretty high return on equity. However, work is needed on their U.S. operations?
Yeah, their ROE is the lowest of the group, but it is improving. And so one of the biggest incremental data points that we got from the quarter so far is that they expect to be exiting 2027 with an ROE of 15%. Now, their ROE in 2025 was 11%. So if you do the math there, I mean, that just generates great earnings growth. And they can do it from a number of directions. U.S. banking, to your point, Andrew, that's a big piece of it, right? They're going to have to do a lot better in the U.S. in terms of generating wealth management revenue, reducing costs, rationalizing the footprint. But, Canadian costs, Canadian credit, those are going to be factors as well as the fee revenue we talked about earlier, investment banking, wealth management.
So you have a buy on Bank of Montreal. You also have a buy on Bank of Nova Scotia. You feel that the repair job or the restructuring at that company is doing well. They had quite a few years of underperformance.
Yeah, they've done a good job, and they've had great execution over the last couple of quarters. If I look at the international business in particular, I mean, that was something that a lot of folks didn't want to touch last year. It was an area of major concern. I think right now people are turning around on LATAM. Maybe it's going to be a growth area. Probably not in Q1 right away, but over the next couple of years, that could be an outperforming earnings grower.
CIBC, you have a hold. Is that because of valuation?
Yeah, primarily. I mean, look, they've been executing great too. They've done a good job rationalizing costs, growing net interest margins. I like the way that they've been performing, but their valuation, they're not cheap anymore.
Why have investors been jumping in to CIBC?
To CIBC?
Yeah.
Yeah, I mean, you know what? Everyone likes a good execution story, right? If you're doing well and you're blocking and tackling correctly in this business, investors reward you, and they should. They've earned every dollar that they've kind of improved. Their ROE's been great. Their Canadian banking operation has been very successful. To me, the biggest question for CIBC is where's the next leg of growth, right? They don't do international. They don't do the U.S. So it's a lot of Canadian exposure. For the valuation at this juncture, it's just not there for me.
And National Bank, also you have a hold. Do you feel the stock is relatively expensive?
With National, it's kind of the same story. Again, yeah, to your point, it is expensive. I think when I think about what I like in a bank right now, it's stories where the earnings growth is relatively easy in terms of, how you're going to get up, 10 or 12% over the next couple of years. So nothing against National. I think they've done a very good job, but a lot of their earnings in 2025 came from capital markets. To me, there is some questions around the replicability of that versus BMO, like I said earlier, where the steps are clear in terms of how you're going to get earnings growth.
Royal Bank, the aircraft carrier of the sector, you do have a buy on that one.
I mean, you can't bet against Royal, right? I mean, their ROE is great. Their ROE guidance is even better. And frankly, I think that they could outperform that this year. If I look at the kind of recipe that they've got, their wealth management business is the biggest. Their U.S. exposure is good. Their capital markets is best in class. I mean, it is expensive. Royal is not a discount bank by any means, but when you buy that, you're buying quality, you're buying execution, and I think they've done both.
What is your, okay, and we'll just round it out then, TD Bank, set to go on winning back investors?
Yeah, I mean, it's been an incredible story over the last couple of years. We obviously had the anti-money laundering issue with TD. They came out of that. They apologized profusely. They invested in order to make sure their AML strategy was succinct and strong. They've restructured the U.S. business a lot. I think there's a lot of growth there. I mean, in Canada, TD banks 1 in 3 Canadians in some form. I mean, you can't beat that market share. In the U.S., they're a top 10 bank as well. And frankly, it sounds like the strategy is in the right direction right now. I think that's what people like.
1 in 3 Canadians, you said TD does business with one way or another?
Yeah.
That's amazing. Just finally, Matthew, I don't think you cover EQB, but could you give me your broad thoughts on them becoming a bigger competitor with the acquisition of PC Financial?
I don't cover it. I do believe that there's always a benefit to having a bigger, more scale bank. So, anything that helps you do that profitably is good. Again, I don't cover it though, so I don't really have a qualified opinion on that one.
For sure. The government, as you know, in the latest budget made noises about increasing competition in Canadian banking, but my guess is anything will occur at a glacial pace.
Yeah, I mean, look, the Canadian banking system is very strong. We've done a very good job of managing through crises. We've protected the Canadian consumer. We've protected savings. Even, given the real estate market today, we're not panicking the way that they did in the U.S., over a decade ago. So I think you have to balance adding competition with, providing those protections to Canada overall. And I think the banks have done a really good job. And the other thing to say about that, too, the banks are competitive amongst each other, right? I mean, you talk to any mortgage broker, you talk to any retail banker, any commercial banker, they're out there competing every single day. So I don't think there's necessarily a lack of competition in Canada.
We'd better jump. Thank you very much, Matthew.
Sure.
Matthew Lee of Canaccord.